Hey, what's up, guys? I'm going to try to get through this video. As you can tell, I've kind of lost my voice this week. But this is Kenny, Senior Research Analyst with the MiniAnalyst.com. And the first thing we're looking at here on this 15th day of June, Friday, 2018, is the market, the S&P 500 futures. And what we did, what was interesting, was a few days ago we actually switched our official market timing bias from bullish, which we had gone bullish on April 3rd at 25.85, up to we didn't go bearish, although we did issue a MADSC short setup off this trade, but it went to officially neutral at 27.92 around 3:40 in the afternoon. Definitely, as we mentioned in the last video, we were on a trajectory for hitting 2800 in relatively short order after we had this explosive move and the blast above this former and still probably arguably significant, even more significant given the ascension of the intermediate term measures of trend following significance, culminating with the horizontals, suggests that it could be some pretty monstrative support. The 10, the short term trend that might be unlikely to hold, and we will be looking for a move to go back to bullish around 2700 or 2725. That's just about 50 to 75 points lower than the market is currently now at 2775. Now, having said that, if the short term does hold and this market does blast through this very strong level of resistance, 2800 right here was first touched there, monstrous outside bar reversal, near outside bar reversal, bearish tail, off the 24,800 level, but it was kind of an errant end of the year bullish scenario, and you obviously saw the corrective action after the in February of that. But now we have this chop. We're back at the upper end of the trading range. So we're definitely going to look for at least a pullback to around 2,700 to get back onto the bullish side, and that's where we are very likely to take our profits on the MADSC short setup, which actually went short there at 27.92. Again, we've got the short-term measure of trend following support there. As far as trades, not had too many. SP System 1.0 sitting on a long setup. That's about it, and it's fortunate because when you have this kind of chop, you definitely don't want didn't have that long setup in the boost like we thought we did, but the didn't get a long setup in the crypto, but have been participating nicely. The let's see, but Mace did have a beautiful setup on taking advantage, almost literally an amazing trade right there. So $5,400, almost buying the low of the move and getting out near the high of the move. So if you guys are interested in participating with the Mace, you can certainly go to the website, chat with support team live, and they can get you involved in trading the Mace or any of our other portfolios. Actually, one thing we wanted to mention was the Sharpe ratio. If you look at the Mace, actually we're going to look at the Platinum, but the Sharpe ratio of the market, the SP 600 right here, as you can see, or the SP 400 mid cap, which we trade, actually the Mace trades, gives you an extra 5% return annualized for a unit of risk. The S&P 500, if you invest in that, gives you a 0.3% return per unit of risk. But if you look at our portfolios, if we can pull this up, so the Platinum has a Sharpe ratio of so you get an extra 47% return. Now that's a Platinum, of course, it encompasses everything we offer, and that's 47. Save the MADSC and MADSCDT. 47.45% extra return for a unit of risk, because you look at the returns, you're like, oh, there's a lot of risk trading futures, and there is a lot of risk trading in futures, so you kind of, is the reward outweighing the risk, and that's measured by the Sharpe ratio or the modified Sharpe ratio, which comes in at an extra almost 20% return on top as per unit of risk. So that's pretty impressive for a modified Sharpe ratio of the Platinum. But we can actually go and look. Let's see where the Mace was. We can look at the Sharpe ratio. Oh, actually probably have to go to view full results, and we can go to the summary, and where was that Sharpe ratio? Right here. 29% modified Sharpe ratio for MASE, and 42% return, extra return per unit of risk. So pretty impressive. If you guys are interested, you can just go to the website, like we said, and subscribe. You can have the trades sent right to your cell phone, right to your email, however you'd like to receive them, or just set up an account with an auto broker and have everything auto traded. But that's the market right now. We're currently neutral, definitely at new highs on the Russell. Actually, we can go ahead and go back over and take a look at the Russell. Where was the Russell? Where was the Russell? Russell 2000? Wow, that is an impressive move. New highs on the Russell. EMD right at old highs. Right at old highs. So definitely in terms of the ES and the EMD, awesome opportunity to get on the neutral side or even short side if you're being aggressive, like we're in the MADSC. Got one short set up in the mini S&P 500 futures contract, the ES, and so we'll wait and see how that plays out. So hope you guys have a great weekend, and we'll see you next week. Okay, so let's do it this way.